Click the bell icon to get latest videos from Ekeeda.
Hello friends, we'll be solving an illustration related to depletion method and understand how to solve depreciation under the category of depletion method. Let's go ahead with the illustration that we have to mention down here on the sheet. So depletion method, as you know that this kind of method is only used whenever there is a scarce resource that is being used or the consumption of the scarce resource starts out. Something like minerals, something like iron ores, so something which is not reproducible again, and those resources are being used further. Under this kind of method itself, we use this category or rather this method of depreciation. When we speak about depletion method, we talk about the consumption being done on yearly basis. So a quarry or a mineral stone or a limestone factory or a certain construction site which has quarry of these details like limestone, minerals, etc. These consumptions, they keep on happening year by year. So but there is an end to that consumption, because at one point of time you will figure out that the all minerals which were there inside that quarry or inside the construction site have been removed completely and there is nothing inside, and hence the construction will stop, or rather the quarry will stop there. So that will be the estimated use, or rather we can talk about the estimated tons that can be consumed there. So that is a denominator here, there is a numerator that will be provided to you in the question, and accordingly you have to go ahead and solve it out. So let's figure out with the notations and the illustration that will be jotting down here. Let's jot down the illustration and explain to you first. So as you can see, we have mentioned down the illustration for you. You can start and further go ahead, record all these transactions for you and mention these details in your book. Now let's go through this illustration and understand what exactly has been mentioned here. Messrs. Jay and Company leased out a quarry on 1st of January 2013 for 1 crore rupees. The total quantity of mineral deposit in this quarry was somewhere around 2 lakh tons. The extraction pattern of these minerals in the form of tons was mentioned as follows, that is 2013, 2014 and 2015. 2013 it was 2000 tons, 2014 it was 10,000 tons, and 2015 it was 15,000 tons. We have to calculate the depreciation per year and we have to show the lease account also for all these years. So what we'll be doing is that we'll be starting with the working note first and understand how these details are calculated and how further we can make sure that all these depreciations are calculated in a flawless way. Rather, before that, we'll start with the timeline and understand all these details so that a gist can be prepared about all these things and kept in one page itself, so that we have, or we rather we don't have to go back and look at the question. All these details will be directly mentioned in that gist. Let's go and figure it out. So if we can see that we have mentioned out the gist of it, we have to further go ahead and calculate certain details. We have also mentioned the formula here, which states that depreciable amount equals to cost of that quarry multiplied by extraction per year divided by the total extraction output capacity of that quarry. So for example, if for 2013 we have to figure out cost of that asset is 10 crores, or rather we can say that cost of that asset is 1 crore and multiplied by 2000 tons divided by 2 lakh. That means the total quantity of that specific quarry to extract minerals or ores. So this is how you calculate the depreciation. Let's figure out the first year working, and then we'll simultaneously go ahead with the preparation of lease account as well. So if you can see, we have calculated the working for the first year, that is 2013. The cost of that asset or that quarry is 1 crore rupees. The extraction done in 2013 is 2000 ton, and the total extraction capacity is 2 lakh ton itself. So the depreciation amount for the first year, that is 2013, will be total cost, that is 1 crore multiplied by 2000 divided by 2013. That means the total extraction quantity 2000 divided by the total extraction would be 2 lakh tons. So this will give you 1 crore multiplied by 0.01, which will give you a total of 1 lakh depreciation for this specific year. So this is the working for the year 2013. Similarly, we'll do the working for the year 2014. Let's go ahead and figure it out. So as you can see that we have figured out the total depreciation for year 2014 as well. Here we have understood that the same formula is supposed to be used, that is cost of the asset, that means 1 crore rupees multiplied by the total amount, that means the total extraction for that specific year, which is 10,000 tons, divided by the total extraction of that specific quarry, that is 2 lakh tons, which will give you a depreciation of 5 lakh rupees for this specific year 2014. So that is the depreciation. We'll now figure out the depreciation for the year 2015. So if you can figure out, we have also done the depreciation calculation for the third year as well, that means year 2015. Here what we have understood, that the similar formula is supposed to be used, and the depreciation that we have calculated for this specific year is 7,50,000. So this is how you calculate the depreciation of these specific years using this specific method. Now the second category of the question related to preparation of lease account. So let's go ahead and prepare the lease account, and we'll mark the closure of this sum. So if we can see, we have done the preparation for the first year, that is 2013. The quarry account has been prepared. The debit side will have the total of the cost. That means the entry that we would have passed if this asset was purchased. That means asset account debit to bank account. So asset account debit side, it will be mentioned as to bank account 1 crore. On the other side, that means on the credit side of this specific account, we'll have the depreciation and the balance which has been mentioned. So the depreciation for the year 2013 was 1 lakh rupees. So the depreciation for this specific account or this specific year was 1 lakh rupees, and accordingly we have to prepare, or rather we have to prepare the balance carried forward. So here the balance carried forward will be 19 lakh rupees, which is carried forward to the next year 2014. Now we'll mention the depreciation for the next year, that is 2014, and we'll figure out what is the balance here. So if you can see, we have prepared the balance for the next year as well, that means 2014, whereby the total balance that was carried forward from year 2013 was 99 lakhs, and accordingly depreciation of 5 lakh was provided here, which brings you the balance of this account as of end of 2014 to be 94 lakhs, which is the opening balance of the next year 2015. And accordingly we'll calculate the depreciation. So we'll be putting the depreciation on the right hand side of this account, which will give you the closure of this specific question. Now we'll start putting the depreciation for the 2015, and we'll start with the calculation of the final part of it. So if you can see, we have figured out the balance for the year 2015 as well, which is the closing balance 86 lakh 50,000, which will be further moved to the next year 2016, and so on will this specific format go on. So this is how you prepare the specifications when it is related to depreciation as per depletion method. So I hope this sum give you a lot of clarity on how to solve a depletion method problem and what all details are supposed to be mentioned while the calculation of depreciation is important in this part. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.